There could be some very interesting opportunities here for bookings holdings. So first off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So we go here to the other themes, and I have a theme here called Holiday. So 24% here from the low, but we are still very much so in a bear market. So we do have bookings holdings. They are in the travel planning business. 5% here from the low and minus 20% pullback. So literally bear market territory. So here is their website, great for finding a place to sleep, flights, car rentals, attractions. Yeah, so yeah, nice informative website and quite, famous name in this business. So here is the chart, big picture, weekly data points. So looking really long term, you see that this stock has been in a pretty ferocious uptrend. Thousands of percent here from the lows made here in early 2000s. Something that is also very apparent is that this stock, it has its own bull and bear markets. Like all of a sudden here, as an example, we decided to have a bit of a bear market. So yeah, this is a stock that has its own rhythm, which means that it's really good for like a long short portfolio. So the thing is that we have recently seen a pullback in this stock. So let me just draw in the pullback. So let's get the drawing tool out there, and you see that we could make a very strong case that we have a horizontal support zone in this territory here. So this is interesting. Let's just jump right into the daily data points, because then it's become a bit more clear, because this stock, it's one of those time cycle stocks. So you see here that, decline, rise, rise, decline, rise, decline, rise, decline, rise, decline. So the time cycles here have been really clean, really, really squeaky clean for quite some time. They have been absolutely amazing, if you wanted to be like long, short, long, short. We have a rising phase here that is supposed to begin pretty darn soon. Yeah, lately we have seen time cycles become more relevant. So yeah, from a technical perspective, this looks really interesting due to the time cycles. So as far as letting the trend be your friend, the trend here is pretty clear that bookings holdings really likes time cycles. Looking here at the weekly data points, so the RSI we have currently pulled back to a level. Like here we have the almost same level on the RSI, and we did get the bounce in price here as well. So we are in a very interesting territory in terms of weekly RSI. Looking at the distance from the purple 20 and green 50-week moving average, we are also at levels that have triggered bounces very recently. When we go here to the daily data points, in terms of accumulation distribution, we do have a bullish divergence between price action and that indicator. So there are buyers. Looking here on the daily data points, RSI is currently bouncing from a level that has triggered lows many times now recently. Also, the distance from the PPOs tells the same story. So let's make some notes. So in terms of the line in the sand, the key part of the thesis is time cycles. Bull like this, and yeah, we could say RSI and PPO support. Okay, and so in terms of getting the technicals and overall rating, this was really clean, really squeaky clean. So I do think I will give this a bit solidly to the bulls. So let me give them a 5. The next thing we will look at is seasonality. So to the right, we have the average over the last 5, 7, and 10 years. And you do see that there is a tendency for there to be some strengthening in seasonality here over these timeframes. Initially here, it usually strengthens towards the last part of March, pulls back a bit, and then it really gets into high gear. To the left here, we see that over the last 5 years, from March to April, it is extremely strong. over the last 10 years. We do see that March is 50-50, but April is very, very strong. When we go full big picture over the last 20 years, then we do see that when we just draw that in here. So the current seasonality is just very, 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 very bullish. So March and April are the strongest months over the last 20 years. So given that, looking, shorter term and also longer term, we have very strong seasonality here. I think I will give this rather firmly to the bulls. So I think I will give them a 5 on this as well. The seasonality here is very strong. And the time cycle tool is also a seasonality tool. So I think it actually adds to the whole seasonality picture. So I actually think I will upgrade the seasonality here to a 6, given the time cycles. Next on the list are the fundamentals. So here we have SACS, number 3 hold, C value, C growth, D momentum, industry rank, bottom 11%, but they have a very broad category of internet commerce. I think this is way more specifically travel. The key thing about any kind of stock categorization is that you should put it in the category that sort of captures the key drivers. And there's very unique dynamics in terms of travel stocks. Okay, so market cap 85 billion US dollars. There's no dividend at all. When we look here at insiders activity, we do see buy. Then we see a bunch of sells. So a bit of a messy message here. When we look here at the numbers of shares transacted, so here we see double digits. No, 4 digits. Okay, so 4 digits. In the thousands here of accumulation, and here you just have triple digits and some double digits here on the distribution, which means selling. So the insiders have been selling far less than they have been buying, which is bullish. Looking here at consensus estimates for the stock, 35 analysts are covering it, so that is pretty significant. So the average price target is 26% above the stock price, highest target is 57% above, the lowest is minus 12.6% below. So in terms of giving the fundamentals here a score, I do like that the insiders are buying. The SACS scores were fair, and you also had, the price targets that were, bullish. So there's a high probability that the people who look at fundamentals they are more likely to buy than sell bookings holdings. So I think I will give this one a 4. Let me draw that in or type it in. Then finally, we will look at relative performance. So here we have a total crash in the software. Okay, so let me do it like this. This is one of the issues with investing.com, and also the reason why I'm not going to buy the premium version yet, because it keeps just crashing. Okay, but I do prefer to use free tools when showing these videos, because that makes it easier for everyone. There are some paid tools that I use, but the issue is that some of the tools, they have these rules where you can't really share the research with people, so it's extremely risky to publish a video online of me showing the data from that program. Anyway, we do have 85% correlation with the S&P 500. We have 83% with XLI, which is the consumer discretionary ETF. Then we have the PEGA, which is the entertainment and leisure ETF, and here we have 85% correlation. When we jump into the daily data points, then we do fall down to 12% with S&P 500, 16% with XLI, 26% with Away. So Away is one of the few travel specific ETFs. And then we have 52% with the PEJ. So both looking long and short term, we actually have the strongest correlation here with the PEJ. A bit surprising. I did expect the Away ETF to maybe be more strongly correlated, but this is the beauty of the correlation tool, is that it is just mathematic. It is very it's just facts, and I think that's very beneficial. A lot of people, they don't look at correlations, and that is a huge, huge, huge issue. As an example, there are, cryptocurrency ETFs out there that are very weakly correlated with cryptocurrencies, which basically means that they don't work as cryptocurrencies ETFs or cryptocurrency proxies. Okay, so here is PEJ. Let's do a quick technical analysis, because what happens to the PEJ due to the strong correlation with bookings, they are going to, PEJ will affect bookings. Okay, so we do see here that we have a bit of a rounding top-ish pattern here. So that is a bit of an issue. Let me just draw it in a bit. So you have a bit of a declining trend line there. This is not like, super bearish, but it certainly is not bullish. If we go here to the daily data points, we do see here that the blue 100-day moving average is currently a pretty solid resistance level. So the bears just short, they short, they short, and they are very likely to put on short positions if we test it in the future as well. Yeah, okay, so it's a bit weak here. So here I am looking at, booking holdings against the PEJ, the leisure and entertainment ETF. So you see here that bookings, it has been, generally speaking, outperforming the broader ETF. It's been pulling back a bit, but that has been the trend here for these two. You see that the price action here is very erratic. It is very much, let me just draw it in. It is very much like this, up and down, up and down, up and down. That is the trend. So yeah, it's just the way they dance together. Let's go here to the daily data points and look quickly at the seasonality. So there is a tendency here for bookings to actually weaken against the ETF here towards the 23rd of March. Then it usually strengthens. Yeah, that is the seasonality. If we look here and compare the PEJ with the S&P 500, so yeah, we have seen that this one has gone from massive outperformance to dramatically underperforming the SPY. To now there's more of a battle, I guess, between the bulls and the bears. We do very clearly though see that we have had a series of these lower highs here, very clear. And generally speaking, we have also seen lower lows. So yeah, we still have we are currently in a downtrend, meaning that the PEJ has been underperforming the S&P 500. Okay, let's just very quickly look at the seasonality. So let's zoom in a bit. So what is the tendency here? So usually the PEJ, it strengthens against the SPY heading towards mid-March, and then it weakens very dramatically. So in terms of relative performance here, we do see that the ETF that is most likely going to affect bookings holdings, that one is it's weak. It's in a vulnerable position that is beneficial to the bears. There has been some tendency though for bookings to outperform the ETF, so that is a bit bullish. But when we then looked at the ETF against the SPY, we have a very clear downtrend. So this one is a bit. I actually think I have to give this one here to the bears, not in like a very dramatic way, but I think I will have to give them a -2 here, because this was a bit more bearish. So to sum up, taking all these scores together, we end up with a 3.3, which means that I feel more bullish than bearish here. A key part of the bullish thesis is definitively the time cycles that recently have been extremely squeaky clean. We also have RSI and PPO support, and that's like the line in the sand. So even though the technicals, the seasonality, and the fundamentals are rather bullish, it is very important to still just have some line in the sand, because if the bulls do not show up when you have a bullish overall context, and all of the things that I have highlighted in this video are real facts, this is not made up seasonality or made up fundamentals, this is the real deal. If the bulls do not show up, that will be interpreted as very bearish. So it's very much, so that's one of the key things about the markets. The most important thing about any metric is how the market interprets it. So yeah, I think that there's way more reasons here to be bullish than bearish on bookings holdings. But the big but is that the bullish thesis is contingent on the time cycle and RSI, well, oversold support. Whatever you do, of course, you do want to be market neutral, use stops, and definitively consider the ethical ramifications of any kind of investment. I do see that there's a lot of people who are, pouring money into military stocks at the moment, but you need to just understand that this is that what we have what is happening now is the real deal, and it could become very, very, very dramatic. So going forward, I will primarily, in terms of the defense stocks, look at ways to actually short them.